Libby, there is a lot going on today. The impeachment hearings, of course, getting an awful lot of attention. Should the market be concerned about that?
Well, look, I don't think the market will be concerned. They haven't been concerned up to this point, and for good reason, right? Because I think the market will only be concerned, in the short term at least, if it looks like conviction is probable. So I think impeachment in the House is almost a certainty at this point. It's really just a question of whether you can get those 20 Republicans to vote with those 47 Democrats in the Senate to convict the president. That's when I think the market will care, and that we seem like very far away from that probability.
David, if we can turn your attention to Powell, obviously Steve Lee's been giving us a rundown there. No preset course, but very unlikely that we're going to see any action in December, as he noted with the probability. Do you think that the Fed is on a course of action that feels, quote unquote, appropriate for you for the current scenario?
Yeah, in our view, we think that what the Fed has done so far is probably enough. There are some risks, though. If the trade tariffs do go forward, we could see some further slowdown in economic growth in 2020, and as a result, we could see the Fed resume some of its cutting. But until we see if that doesn't happen, then I do think the Fed is probably likely done with its cutting stance. I think the market is generally correct in terms of how what its own outlook is for further rate cuts from here.
Libby, trade continues to be that major question mark. Maybe we're close, maybe we're not. It seems like we've been here before. How risky is it that we may not get a trade deal in the near term?
Yeah, Courtney, it's a great point. It's something that we're spending a lot of time at Pimco discussing. So there are two trade policy sources of uncertainty. One is actually there's a deadline today for the president to make a decision about what he's going to do with auto tariffs. Now, the market expects him to delay that deadline. I think that probably is right, but that will be an uncertainty that will remain in the marketplace, especially as it relates to the auto sector. Then, of course, the bigger one is sort of the China and U.S. trade tensions. And at this point, it feels like the market is really priced for perfection on this particular issue, in that they're sort of assuming that this phase one will get done. There is appetite, certainly on the U.S. part, certainly on China's part, to reach this phase one agreement. But, wow, are there still some sticking points just to get to this phase one? And so I think that should make investors a little bit more cautious in sort of extrapolating that if we get a phase one, then we'll get a phase two. Because if phase one, sort of the easy stuff, is this hard, I think phase two is going to be much more difficult and is unlikely, honestly, to result before the election.
Do you even think we get a phase one signing by the end of the year? Is that your base case?
So, my personal view here is that this has been and will continue to be probably more of a hard slog, especially given where the market's priced. President Trump obviously has some electoral incentives to get something done. Certainly China has slowing growth in their own country. But the big issues here, the issues that have been sort of the stumbling blocks to get a bigger deal, are still those issues. And U.S. negotiators, they're trying very hard in order to overcome them, but they still remain obstacles. So, to your question, sure, is our base case that you get a phase one? Sure, but I think that there is more downside risk than was priced in the market.
And David, if you are the Chinese and you're watching the impeachment hearings today and you're looking at Iowa in, 10 weeks, what is their incentive to sign a phase one unless these tariffs do come off?
Yeah, I think for both sides, I think the incentives are that the tariffs have done some damage, certainly to business confidence and probably actual economic growth on the margin in both countries. So I think the incentive is to try to mitigate that. And as the president talked about yesterday, if there is no deal, then he's threatening to continue to raise tariffs. And I think there's enough common ground that both sides can find a small area of agreement and just kind of put this to the back burner for some time. And I think, as Libby was saying, I think that's kind of what the market is expecting. So if we don't get that, there is some risk there. But it does seem like that the parties are moving in that direction.
David, it seems like we've been a little back and forth with the markets, not making any major moves in one direction or the other for the last several sessions. What do you think could be a major catalyst to prove to be a breaking point in either direction here going into year end?
Yeah, the next couple of weeks, it's kind of going to be somewhat quiet. Earnings season is winding down. I think everybody knows at this point that earnings season was okay. It wasn't fantastic, but it certainly wasn't as bad as some people were fearing. We don't get any big economic data either in the next couple of weeks. We have to wait till the first of the month, really, for that to start to come in. So I think it's going to be a lot of focus on trade. Any nuances that we hear on the trade front, that's a big focus. But otherwise, it may be somewhat quiet. I think maybe Black Friday, seeing how retail sales come in around Black Friday, that's an important indication around the health of the consumer, which has been a big support for the economy. I think investors want to see confirmation that that is still the case.
Absolutely. David, quickly before we let you go, can you give our investors some advice? What would you be looking at sector-wise here?
Yeah, sectors, we have a somewhat balanced approach. So I think the consumer still remains very healthy. We're just talking about the Black Friday data that's going to come in soon. So consumer discretionary, consumer staples look to be well positioned. We like communication services because it's also a nice offensive and defensive. You've got the internet services companies as well as some of the telcos. So those are the areas we'd be focused on.